Hello, this is Brian Shannon from AlphaTrends.net. Today is Monday, the 2nd of June, 2008, and the S&P 500 saw some selling here today. It was down $1.55, or about 1.1%. Recently, we've seen that the market did find resistance at that declining 200-day moving average. It sold off from there, rallied up to the 10 and 20-day moving average, which was about where we were looking for it to find some resistance. It did find resistance there apparently because this little consolidation from Thursday and Friday, late Thursday and then Friday, was violated on the downside support level of 140 that we were looking at. And I was kind of thinking that maybe it would lead to a move down towards about 139 and a quarter and find some potential for support there at the 5-day moving average, and just the fact that this was a prior important level as well, as far as support back here and then resistance here that was broken last Thursday. So that failed to hold, and again, that just shows why we look at these levels of support as potential, because we only know support or resistance after the fact. This level was not violated on the upside. That was the 141 level that I thought if it got back above there, then maybe it was going to continue to run higher, but obviously that didn't happen. So we saw the failure of 140 right on the open to hold, and the sellers were pretty persistent in there for the first hour or so of the day. If we take a look here at the 1-minute time frame, you can see they were very persistent up until about 10:30. Then it kind of went sideways a little bit, never got above the declining VWAP, and then we saw an even harder sell-off right here as the second shoe dropped, and a little bit of recovery late towards the day as the buyers were able to push it back above the average price. But clearly, the market saw some damage in here today. When the market tries to rally like this and then fails, you've got to be on very high alert. I think that it just adds to the importance of this level right here at about 137.70 or so that we've been looking at. Breaking below there and holding below there, then I think that you're going to see, even though we have a rising 50-day moving average, I think you're going to see further sell-offs down towards 134, and then the levels I was talking about on Friday, near 132, 133 or so. So you have to be able to continue to look at and focus on price action. Clearly it was a negative day today, and the market is below this 5-day moving average, so you've got to be very careful in here. A lot of stocks were breaking down in here today. The advanced decline, we only saw 973 stocks up and 2,100 down on the New York Stock Exchange. So pretty negative day. One winner for every 2 losers. The IWM Russell 2000, this broke down as well. It's back below the 74. It's right at 74. The level we were looking at in here was 74.20. Thought that if 74.20 broke, then we wanted to get a little bit more defensive in here. Because we thought that would lead it down to about 73.60, which was these highs back here from last week where the market broke past. So right now we do have what looks like, this little pattern of lower highs and lower lows. Maybe, starting to stabilize in here towards the end of the day a little bit. And I would just want to go back to the S&P 500 just for a minute, because I forgot to point out that it looks like for now this is going to be the important level, about 141. We have what is looking like a lower high right now. If it breaks below this level here, 137.70, then I think that we have a lower low, and that's officially the definition of a trend. So got to continue again to be very vigilant in here. The Russell 2000 though continues to hold just below this declining 200-day moving average, and again looking at the weekly time frame, you can see it's a very important level, and there's a hard-fought battle being fought in here. There's a large battle being fought between the buyers and sellers, and right now, I mean, you could maybe even make a case that this 30-minute time frame is setting up an inverted head and shoulders pattern. Realistically, it's just a real choppy looking pattern in here right now, and I think it favors short-term trading. I don't really see much edge in trading this Russell 2000, but above $75 a share, then we could see some of these shorts get squeezed. So you want to leave the opportunity open, although the weekly time frame doesn't suggest it should get it back above there. If I had $1 for every time the market did something I didn't expect it to do, then then I'd have a lot of dollars in a big pile somewhere. But right now, you've got to be careful at this, because it is this longer-term inflection point, and it just pays to be prudent in here. Like I said on Friday, you don't want to be making any big brave directional bets. The financials came down below the recent lows, but we're unable to hold with some bad news. So perhaps they're starting to stabilize a little bit in here. Clearly, the daily time frame is still clearly very negative. There's nothing at all positive in here. 30-minute time frame, we saw a lower low today and then a little bit of recovery. I wouldn't be a buyer of this, but it's encouraging that it that it was able to recover here late in the day. So I think that again, I've said it 100 times here about these financials, but typically in largely damaged groups like this, if they don't scare you out, they're going to wear you out. And it looks like we've just got some probably more neutral, just boring trading going on in here. But you do want to keep an eye on them, because if they start breaking really, really hard, maybe below $24 a share or so, then it's going to be much bigger trouble for the broad market. The NASDAQ was down as well, down 61 cents here, but this market continues to hold up the best. We've got some resistance recently up near about $50.30 or so. If we can get back above there, then things will be looking a little bit better. We've almost got this 10-day moving average crossing down through the 20-day moving average. When that happens, it indicates indecision, and indecision comes at turning points. Not necessarily that this is going to lead to a bigger sell-off, but it's just something to be aware of, that the market is, just kind of been neutral in here as it holds support above this 48 level, where we see the 200-day moving average, and then resistance up near about the 50 and a quarter level. We still have, I don't know if you could really call this head and shoulders pattern, because it went so far on the right-hand side, but obviously, the implications below 47.75, 48 are that this market would likely lead to about a 2-point move lower down towards 46. It's not looking like that yet, but we have to be aware of all possibilities. This very short-term uptrend was broken in here today, and the market was able to stabilize near this 5-day moving average towards the end of the day. But clearly, we're more range-bound than anything, and it remains more of a stock picker's environment than anything. The Dow was, hit basically, about 1% today. I was going to say hit the hardest, but it actually wasn't. But this is the group that actually looks the worst. As I pointed out on Friday, this level has been very important here near 27.5. It was support back here, resistance a couple times. That resistance broke. It was tested as support once and then twice. It failed about a week and a half ago, and now it looks like it's acting as resistance once again. So I would be most concerned about the Dow. It looks like maybe it's going to stabilize in here a little bit, continue to bounce a little bit, but a lower high in here, then I think it would be make a lot of sense to start looking at this DXD, which is the inverse Dow, the double inverse Dow ETF.